Hi, my name is Amy. Thank you very much for watching, and let's make some bad financial decisions together. This is for entertainment purposes only, so if you're entertained, please like and subscribe. I'd really appreciate that. So, Mark asked yesterday if I could check on some of the funds that he's interested in and to see what the margin maintenance is. And so I would like to start off with guessing what the margin maintenance is on these. So I think for YMAG, it's at 35%. Also, I hope you all are being warm and are safe out there, because we're currently having a snowstorm and I'm kind of housebound right now. So yeah, YMAG is 30%. RDTE, QDTE, and XDTE should be 25%. If y'all could do me a favor too, if you use like Interactive Brokers or Charles Schwab or any of these other crazy kids, could you tell me in the comments down below how these compare? So yeah, these should all be 25%. Just double checking, because you never know. I think I didn't do RDD first. Okay. But this was the most recent, so if... I really hate that they... Okay. So yeah, so that's also 25%. And then we have YETH, so that's probably 60%. Your ETH, your cryptocurrency, and yet you're still 25%. This because it's an altcoin, and they haven't put the gavel down on it yet. So, but MSTY's, I'm pretty sure 60%, because it was at 25%, and they were like, oh shoot, this is super volatile. Why would you want all of this? We can't have this at that much. Yeah, so 60%. But the initial requirement's only 68%. So it's got that going for it, which is nice. GIAX, which is this new? Because people have been asking me to put this in YieldMite, which I will this weekend. I actually did update YieldMite tonight, but it's not everything. Is just what I finished gathering all the information with today. So anyways, oh, it's not that new. It's from July 29th. I'm reading this. GIAX invests in globally listed stocks of index tracking ETFs while employing a daily credit call spread strategy. That doesn't really tell me much. I would have to not do this live, but it's a 25% maintenance. But yeah, we've got that going for us, which is nice. I was watching a YouTube video today about Defiance and SPYT, and this one, I had good impressions of this, so it's 30%. That's surprising to me, because this has been paying 20% pretty consistently, but it gets capped more than the other SPYs because of how they do their call spreads. So I would look more into SPYT if that's what you want to go into. So then AIPI, I think, is 25%. Okay, good. And FEPI and CEPI would be still 100, because it hasn't even done the first yeah, so that's 25%. And then I could tell you that CEPI is 100%, because it literally just came out like last week, right? The inception date is... What are you doing, CEPI? You're already at 25%? Huh. I mean, I shouldn't be angry at that, because I literally... But that doesn't make any sense. It was at 100% maintenance when I bought into it, but I really thought that they didn't change those back. Like, you have to have a distribution. There's a time span, because this is a crypto-related digital thing, so it's Bitcoin-related, and I thought that all of the, like, Bitcoin-related ETFs were at, like, 30 to 60%. So this might get adjusted up later. I'm not sure why I'm upset that it's at a 25% maintenance, but here we are. Mostly, I think here that, yeah, if you do buy into this, it could be that, like that situation I had with MSTY, where it's at 25%. I had my portfolio proportions with that in mind, and then they changed the maintenance requirement to 60%, and then all of a sudden I didn't have a good buffer, and so I got messed up. So if you're using margin, just make sure that you keep enough of a buffer, because things like CEPI are really volatile, and also, you know, the markets have been, well, they're volatile anyways, but we're gonna have a volatile year, so make sure that you don't go too much into the margin. You know, the Oracle actually has an interesting video about margin, because we definitely have different investing styles, Oracle and I. He's probably more correct than me, but it is what it is. But, like, if you look at my margin right now, if I can find it, I have, this is my buying power, and this is my buffer. So now I'm blanking on, basically you can do it so that your buying power is lower than your buffer if you are in enough low maintenance. I'm not sure why I'm over here. These are my calls. But basically, if you took these two numbers and it was going to a rating, I would be like a D+. And the way that Oracle does it, it has like your buffer, if your buffer is bigger than your buying power, because you're actually in things that are 25% maintenance instead of me, which is basically all 60% maintenance, then like it's like a quick way to tell whether you have a healthy enough buffer or not. But I had a $10,000 buffer, but then the market went down, so I'm okay with having like an 18% margin. Can I just say margin buffer. And you know, this week has been not amazing, but it's so much better than right before Christmas, because I'm not in any put spreads right now. I am doing my MSTU dividend wheel, and MSTU is not less risky, but since the worst thing that's going to happen is I either obtain 100 more shares or they take 100 shares away from me, it's really not that big of a deal. And I actually I made this song because I was thinking about, I'm going to be giving an update this week about the things I've done, and the market was going down, so I was like, oh yeah, I know it's going to be real bad. So I made this, and it's about buying the dip, and it kind of reminds me of like a 90s era song, but actually, and I also posted this today, Frugal is fab, because Frugal is fab, okay? But if you look in my January options for week 2, I wound up getting $720.23. And the reason I was able to do that is because on Monday at the market open, MSTU and MicroStrategy in general was up. And when you're putting out an option in the direction the stock is going in, the premiums are higher. So I was able to get $500 on Monday through, it was not a ton of activity on Monday for me. I say it's not a ton of activity, and it's like 1, 2, 3. Yeah, so I put out 3 calls on Monday, and then I rolled a call, and sorry, that's not the roll call, but like I sold a put, and then for the rest of the week I just rolled my puts and calls, because after that Bitcoin and MicroStrategy went down. So I figured, instead of doing a pure dividend options, I don't really want to own that many more MicroStrategy, at least not the leverage right now. So I'd rather just roll it into the future, and then on Monday, depending on what my premiums are, I'll roll things into the future and get the ball rolling. But the only real mistake I did this week was this SPY. I rolled it to January 24th, and that was just 1 week too much into the future. And so that was the point when they stopped being daily calls. So I actually wound up rolling it back to expire on the 15th, and had a lower strike price. But by then, on Wednesday, it was on Wednesday, it was the entire market was going down. So it's probably okay that I did that, and now I can climb and add the value to SPY until it goes down. And by having it a week into the future, it gives me enough time to be nimble enough to change my strike prices, so that even though it was a mistake, I still got around $40 for rolling the call back. So I've got that going for me, which is nice. But I only got $60 this week, or $65.52 from my actual distributions from my high income ETFs. So this is not a great week for me in general. My ulti decided to have a reasonable distribution this time, and I had to sell my weekly ETFs last year because I accidentally bought the leap in my taxable account instead of in my retirement account like I meant to. But now we're back to checking, am I doing better than Roundhill XDTE? And I'm going to do a MSTY prediction video this weekend, and I will try to figure out how much collateral I used, and if I'm doing better than if I had invested in MSTY. So I mentioned this a little bit before, but I did update YieldMite a little bit from the things that distributed in December, and I made YBTC weekly. So if you come in here and you say, like, I have $600 to invest this week, if you put $600 into YBTC, it might be around this. YMAX might be around this. This just gives you a general idea of like which ones pay more per week, and then you can say, like, I want to invest in Bitcoin related ones. And so we have YBTC, which is the weekly from Roundhill. You have BitX and YBit and BitO. And you can do that for, all of these. So I think that this is useful. just for like a general comparison side by side. And there are obviously other things to consider with before you do wind up investing in things, but I thought this was a cool visual. Anyways, hope that I said it before, but like seriously, stay safe. It was snowing all day today, and I'm snowed in, so hopefully you all have power and you're staying warm. And I'd like to take an extra moment to thank my subscribers. You all are really amazing, and I really enjoy making these videos and giving you information and interacting with you. And it turns out that I made threshold to get a payout from the monetization that happened early December. So as soon as my address is verified, I'll be getting a check, which is great. And then we have a race between, am I going to get paid from YouTube or my condo rental first? So yes, I have not received that check yet. And the manager for my property management company has not been responding to me. So next week is going to be interesting, because like before it was actually the New Year and Christmas and everything, so I understand that people are on vacation and they're not as responsive, but we're out of vacation season now, so I really do need to know how and when I'm getting paid for my condo. And then I'm not these trends, no. If we go to the audience, the majority of people that view my videos are actually people that are returning. So thank you all so much for enjoying this content enough to watch me a second plus time. So anyways, please help Mark out and let him know what your margin rates are and what brokerage you're using, and or if you use multiples of them, let them know. Or I only use Robinhood, so well, I have Vanguard, but we don't really cover that, and also I don't have margin enabled on there, and I closed my Fidelity account without opening up margin, but the margin maintenance on Fidelity is much higher than on Robinhood, which was the reason why I switched over when I decided I wanted to start using margin. So but yeah, good luck, Mark. They're all pretty much the same. Like, I've heard there's been a lot of advertising for Moo, but without having done any research into it, I would be wary of anything that hasn't been around for a few years. There's been a big YouTube scandal, and I wish I remembered the name of it, but basically a bunch of the YouTubers in the finance space were advertising a brokerage account. Was it a crypto thing? Anyways, it's just that when things are new, you don't know if you're going to get rug pulled, and we don't get rug pulled with our investing money. So I would stick to the main players like Robinhood, Charles Schwab, Fidelity, and maybe the interactive brokers I've heard good things about. So, but yeah, still not financial advice, but just like my opinion. I'm allowed to have those. So I will talk to you all later. Bye.